Thank you. Thank you. It's a pleasure to be here today to talk about practice test. This is Accounting Man. It's your boy. I'm here. Shout out to my subscriber. What? I can't hear you. All right. Shout out to my subscriber at home. Hope you're enjoying this video. All right. We're going to walk through some transactions. This is chapter 2, but regardless of whatever you're learning, these are T charts or T accounts where we're looking at the debit and credit part of any transaction. So we're just going to make some T charts and go from there. The first one says receive cash from the owner as an investment. So we're going to need 2 T charts. You're also going to start labeling these like June 1st. So we need 2 T charts. They're going to be cash and owner capital. Now we need to think about what is happening in this transaction. So if we receive cash, is cash going up or down, everybody? Up, which is a debit or a credit, everybody? Debit. Good. 16,000 over here. If you have a 16,000 debit over here without even thinking about what is happening to capital, what has to go over here? Yeah. You have to put a credit on the other side. It has to be there. Now, it just so happens that capital increases on the credit side. So we're good logically and just by procedure. June 2nd. Paid cash for supplies. I know we're going to have cash. I know we're going to have supplies. If I paid cash, is my cash going up or down, everybody? Down. So is it a debit or a credit? Credit. Supplies, the asset is going up. Debit. Okay. Stay frosty. I'm going to start calling on people. Paid cash for rent on the 3rd. Paid cash for rent. Who would like to walk me through it? Keegan.
900 on credit for cash.
Excellent.
900 on debit for the rent, which is an expense.
Excellent. And now, Keegan, you are famous on YouTube.
Subscribe to me. I will like, yeah.
Make sure to smash that subscribe and like and retweet. All right. Yeah.
Okay, so if you label it on that as well.
Yes. So every single one of these are going to be worth 4 points. Titles and then accounts. Okay. So you get cash and rent. That's 2. If you put them on the wrong sides, you still get 2 out of 4, but you should be able to put them on the right side regardless. Next one, bought supplies on account from Atkins Supplies, $1,700. So on the 4th, I know we're going to have what account first? Volunteer. Connor. Bought supplies on account.
So you do 4
Supplies, yep.
supplies, and then you do account receivable, payable.
Payable, good. Because we are going to owe them money because we bought something from them, but we didn't pay cash. So supplies, Act Pay, Atkins Supply. I'm going to abbreviate. So that is that transaction for those of you watching at home. So what do I do with my numbers here, Connor?
Supplies is assets, so you do it again that side.
Beautiful.
And then Atkins supplies is expense. So we on the credit side.
It is on the credit side, but it's not an expense. When we owe somebody money for something, what do we call that? An IOU or a liability. Good. Expenses are things that we just pay as they come up. So when we rented something, we didn't actually pay or we didn't owe them as we go. We just pay them when they send a bill. Speaking of a bill, the next one says paid cash for electric bill 146. So on the 5th, paid cash for electric bill. Walk me through it, please. Lauren.
It's gonna go down on the credit side under cash,
Good.
and then expense is gonna go down on the debit side. It's 146.
Awesome. So 146 credit to cash and 146 debit to electric expense. Good. The number 8, the first of the 8s. You might be thinking to yourself, why was there 3 number 8s? It's because they're dates and transactions occur more than one per day. So the first one says paid cash on account to Atkins Supplies. Volunteer. Paid cash on account Atkins Supplies. Connor.
Cash for the first one. Oh.
Yep. Cash and
8. Okay. I did not do 8, but
well, the first 8 paid cash on account to Atkins Supplies. So cash and
then it'd be account payable at this one.
you got it. Atkins Supplies. So, to T-charts, if we paid cash on account, what is happening to cash?
Credit would go, or yeah, would be on the credit side.
Good. A credit to cash, and what's happening to account payable?
Would be on the debit side.
A debit to account payable. Good. That's the first 8. Second 8, sold services on account to Tony's Limos. Make sure you're paying attention to this one. I see you guys do this wrong all the time. Sold services on account to Tony's Limo. What are my 2 accounts, Megan? Sold services on account to Tony Limo.
Sales,
Yes, sales. Sometimes you guys write services, which is not an account. So sales.
and then account payable.
We made a sale to these people, and now they owe us money, so we're going to receive money. So it's an good account receivable, Tony Limo. Okay, so how is this changing? It's a $450 sale. Account receivables are what kind of an account? Asset or liability? Everybody? Asset. So how does it increase? Debit or credit? Debit. Therefore, what does the sales have to be? Credit. Wonderful. The next one, number 9. Paid cash for insurance. I'm going to throw it over here. Paid cash for insurance. What are my 2 accounts, Ethan?
Cash and prepaid insurance.
Yep. Cash and prepaid insurance.
And I said cash is going to be credited $1,200,
Good.
and then prepaid insurance is going to be debited $1,200.
Good. Good use of the vernacular also. Cash is credited $1,200. Prepaid insurance is debited $1,200. Transaction complete. Number 10, paid cash for repairs. I know 1 is going to be cash. What's my other account going to be, Jack? If it's something that I'm paying for right then and there, not something I planned on, repair.
Oh wait, what do you say? What you just said a lot of words.
Number 10, paid
Okay.
cash for repairs.
Is it just repair like cost or something like that? Or
Not
repair
cost, what's another word?
expenses?
Yeah, expanse. Good.
You said like a lot of random things, and I was like, wait.
When you watch it back on YouTube, you're like, oh, I get what he was saying.
Yeah.
So make sure you subscribe, like, retweet, and snap.
And then you can actually use the plural version of subscribe.
Yeah. All right. That's my favorite joke. My subscriber. All right, wait, don't leave. Number 10, paid cash for repairs, 388. So, Jack, what am I doing to cash?
It's gonna go up in the debit side.
For cash,
Oh, yeah. Wait. Look at the second
paid
one.
cash. So how does cash decrease if I paid cash?
Then it's debit. Credit.
Good.
Oh, I looked at the wrong side. I forgot it's easy.
Okay. And then repair has to be a debit. So,
To not have them on the same side because it doesn't work like that.
yeah. So you always have to have a debit and a credit. All right, the next one. Receive cash from sales on the 10th. So now we have cash and sales. Someone walk me through how this one looks. How about Nicole? Cash and sales, number 10, or June 10th. Received cash from sales, 476. Yes. Good.
And then for the sales side, it would go up on the credit side.
Perfect. Good. So if you look at this real quick. If you look at number 10, where it's received cash from sales, you could look through this. And every single one that says receive cash from sales, 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 these all will look exactly like this. Cash and sales, cash going up, sales going up. So if you got this one right, cash and sales, you will get a bunch of them right because most businesses exist to make sales. So you should be able to figure that out. All right, let's do the 15th. The 15th is kind of tricky. 15th says, paid cash to owner for personal use. Yeah, I know.
Okay.
Paid cash to owner for personal use. Cash, and what are we going to call it when the owner pays themselves out of the business account? Good. Owner drawing. Okay. What is happening to cash, everybody? Is it going up or down?
Down.
If it's going down, is it debited or credited?
Credit.
Credited. Pay cash to owner for personal use. So it's credited 400. Therefore, what must it be?
Debit.
Debit to drawing. Good. Excellente. Picante. Next one, receive cash from sales. I don't think we need to do receive cash from sales ever again as long as you got the other receive cash from sales. It's cash debit, sales credit. Let's see, paid cash for supplies. Let's do that one. 16. I know I'm going to have cash and supplies. Volunteer, paid cash for supplies. Lauren.
For cash, it's going to be credited.
Yep.
And then supplies, it's going to be debited.
You got it. Credit cash. Cash is going down. It's an asset. Debit supplies. Supplies is going up. It's an asset. Ooh, here's one we haven't done yet. Received cash on account from Tony's Limo, 225. So on the 17th, I know I'm going to have cash and what, Natalie?
Payable, receivable.
Account receivable, Tony. If I received cash on account, is cash being debited or credited, Natalie? Debited. That means the asset account receivable is being credited. 225. Next. Ooh, here's a new one. Bought supplies on account from Pine Supplies. So this is the 17th. Bought supplies on account from Pine Supplies. 17. How about Lauren? Bought supplies on account from Pine Supplies. What are my two accounts?
Supplies and account payable.
Good.
Supplies is debited and account payable is credited.
Supplies, debit. How much? 60. Act pay, 60. And it's account payable to Pine Supplies. 60. Receive cash from sales. Bought supplies on account. We just did a similar one to that. Receive cash from sales. Sold services on account. We've done that. Ooh. 24th. Paid cash for advertisings. Paid cash for an advertisement. We're doing the 24th. Paid cash for advertising. We're going to have cash and advertising expense. It's $125. Who would like to walk me through it? Michael.
Credited cash
Yep.
and then debited. Yeah, debit or swap.
You got it. Credit to cash, debit to add expense. Cash from sales, cash from sales, cash for supplies, cash from sales, receive cash on account, personal use, receive cash for sales. What numbers, excuse me, what numbers would you like to see? Would you like to do any of these numbers together? It's a resounding no. And with that, this is Accounting Man signing off, and you can count on that.